Crypto during a recession. What to expect. Recession seems to be the talk of the town these days. Bitcoin, the largest cryptocurrency in the world, was founded in the midst of the terrible global financial crisis in 2009. It took some time to gain popularity, but Bitcoin and other cryptocurrencies ultimately erupted into a $1 trillion market. But because the Federal Reserve is raising interest rates to fight high inflation, and the whole crypto market is falling sharply from its all-time high in November 2021, many investors are wondering how Bitcoin and other crypto assets will do if the economy goes into a recession. In today's video, we'll explain what to expect from crypto in a recession. Now let's get right into the video. As a result of rising inflation rates and negative gross domestic product (GDP) estimates, many Americans are fearful of another economic downturn. This could be a really worry, since the U.S. economy seems to be slowing down after a period of moderate growth. So knowing what a recession is all about gives you some background. In simple terms, a recession is when the economy does worse for a long time, like several months. This is shown by a shrinking GDP, higher unemployment rates, and less spending by consumers. During a recession, people's everyday lives may be changed in big ways. Almost everything costs more, from groceries to shoes, and workers may have less job security. Defining a recession. Different economists have different ideas about what a recession is. The National Bureau of Economic Research, NBER, says that a recession is a big drop in the economy that lasts for more than a few months and affects the whole economy, not just one sector. In other words, it will have an effect on almost every industry. Recession can also be thought of at the time between the economy's highest point and its lowest point. Most of the time, they're not very long. Since the end of World War II, the average length of recession has been 10 months. Most of the time, the NBER doesn't call a drop in the economy a recession until 6 to 18 months after it started. That means that people could feel the effects of it long before it's official. A recession depends on a lot of things, like unemployment, industrial output, retail sales, and income. However, many people are worried that a long-lasting recession is on the way because macroeconomic problems like inflation and supply chain problems aren't getting better as quickly as was hoped. With 2 straight quarterly drops in GDP to start 2022, some people say that a recession has started. But unlike the last big recession, there is a new type of asset on the financial scene that needs to be looked at. So, how will crypto perform in case of a recession? Well, let's find out. What about crypto? Most of the time, the cryptocurrencies have been around, the United States has not been close to a long recession. Since the Great Recession, the only time GDP went into recession territory was in 2020. When the COVID-19 pandemic started and economies around the world shut down. The cryptocurrency market hasn't been around long enough for us to know how it acts during a major economic downturn. Bitcoin was the first cryptocurrency ever made, and a lot has changed since then. But there have been a few things in the last 13 years when the economy did not do well that we can look at to get an idea of what crypto's future might look like in a full-scale recession happens. 2015 was one of the few times since 2009 when the economy was unstable. After 2014, GDP grew, but at a slower and slower rate each quarter, till the fourth quarter of 2015 when it grew at a rate of 0.1%. In 2015, the S&P 500 had its first down year since the Great Recession. During this time, the crypto asset class took a lot of hits. From the beginning of 2014 until mid-2015, the total value of all cryptocurrencies on the market fell by nearly 70%. In 2018, there was another time when the economy was unstable. The country's GDP grew each quarter, but not as much as it did in 2015. By the end of the year, the growth rate was only 1.3%. The S&P 500 lost 6% of its value in 2018, making it its worst year since the Great Recession. Is crypto a safe haven? When investors think about the chances of a recession or stagflation, they often look for assets that will protect them from the possible storm. But experts say you won't find it in crypto. Popular cryptocurrencies like Bitcoin and Ethereum have lost nearly 70% of their value since their all-time highs. This is because investors have turned away from risky assets since interest rates have gone up. And crypto prices won't go back up until volatility goes back to more normal levels. Until then, we think that the potential alpha in equity markets and the changing state, resulting turbulence in crypto, are better for speculation than shelter from the storm. So it'll be hard for investors in both stocks and cryptocurrencies to beat the market until the recent volatility goes down. No way to value cryptocurrencies. One of the biggest arguments against investing in cryptocurrencies is that they don't have any real value because they don't do anything for their owners. Your return will only come if you sell it to someone else for more money. Because of this, famous investors like Warren Buffett and Charlie Munger have been very critical of Bitcoin and other cryptocurrencies as investors. In an interview with the Australian Financial Review in July, Munger said, "Crypto is a waste of money. I don't want to buy a worthless piece of junk even if someone says they can't make any more." Even people who are more optimistic about Bitcoin and other crypto assets admit that it's hard, if not impossible, to figure out how much they are worth. Crypto could get worse before it gets better. Since crypto assets have already dropped a lot, traders may be wondering if the worst is over. Still, analysts see a lot of risks in the future. Institutional investors in major cryptocurrency exchanges are under a lot of pressure, and many of them are close to failing. Over the past 2 months, Terra, Celsius, and Three Arrows Capital have all gone out of business, and several key players, including Coinbase, have cut jobs. This makes it harder for bullish moves to start up again. Is a recession guaranteed? Even though people are worried about a recession and the U.S. economy has shrunk from 2 consecutive quarters, which is one definition of a recession, this doesn't mean that a recession will happen. The Labor Department says that the U.S. economy added 528,000 jobs in July, and the employment rate dropped to 3.5%. At the moment, we don't think we're in a recession or stagflation at all. This is more like what happened after World War II, when inflation was high and growth was slow for a few years before the world got over the shock of war. No matter how the economy as a whole is doing, good digital asset projects that have real economic value will do well. Some experts think that the crypto sell-off and the financial problems of companies like Celsius and Three Arrows are caused by a mismatch between short-term loans and long-term hard-to-sell assets. This has gotten rid of a lot of the extra risk in crypto, and it's possible that we may have seen the worst for this asset class at the point in the cycle. Predicting Bitcoin's price in a recession. Every cryptocurrency fan wants to know when Bitcoin will stop falling. Every investor wants to buy at the bottom of the market, but history shows that it's impossible to time the market well, no matter what market we're talking about. That won't stop people from trying, though. If we look at how much long-term and short-term holders paid for their Bitcoins, we find that long-term holders paid less for their Bitcoins overall than those who bought them recently. Because of this, people who hold Bitcoin for a short time are hurting more than people who hold it for a long time. Opportunity awaits. During times when the economy is growing slowly, it's clear that cryptocurrencies aren't a safe bet. In fact, they often get hurt the most. When people worry about a recession, it's not unusual for cryptocurrencies to lose 3/4 of their value. But there is a bright spot in the middle of these times. If you had invested in the bottom of these cycles in 2015 and 2018, you would have made huge money. Since Bitcoin is a big part of the total value of the crypto market, we'll use it as a proxy to figure out what kind of opportunity might be out there in 2022. If you'd put $1,000 into Bitcoin when it was at its lowest point in mid-2015, you would have had more than $80,000 by 2017. Let's say you bought at the lowest point of the crypto winter of 2018. If you kept that $1,000 until Bitcoin reached a new all-time high in 2021, it would have been worth almost $20,000. As long as people are worried without a recession, it will likely be hard for crypto to make any big gains. Investors who are willing to take advantage of these low prices to lower their cost basis could be in a position to make money like they did during the bull markets in 2017 and 2021. No one will be able to tell exactly when economic sentiment will change, so no one should try to time the market. However, when macroeconomic conditions improve, we can expect cryptocurrencies to recover just like the economy has in the past. So, what will happen to cryptocurrencies like Bitcoin if the economy enters into a recession? Tell us in the comment section below. And if you guys like this video, then be sure to give it a thumbs up. Also, if you don't want to miss out on any new future videos, then make sure to click on the subscribe button and turn on the notification bell so that you are notified the next time we upload a video of the latest cryptocurrency news. Thanks for watching.